Hey everyone, and welcome to today's webinar where we're going to be discussing one of the biggest stories in the ETF industry, the quest for the first spot Bitcoin ETF here in the US. This is a journey we've been on for 10 years and counting. Ever since the first Bitcoin ETF filing was made in 2013, investors have been eagerly anticipating the day on which we might finally see a spot Bitcoin ETF. But the SEC hasn't been playing ball. For years and years, the SEC blocked a Bitcoin ETF after Bitcoin ETF until finally in 2021, they approved the first Bitcoin futures ETF. But the holy grail of Bitcoin ETFs, the spot Bitcoin ETF, remains elusive. That's where Grayscale comes in. Disappointed that the SEC hasn't allowed the firm to convert the Grayscale Bitcoin Trust into a spot Bitcoin ETF, the firm sued the regulator last year. That lawsuit's ongoing, and we're expecting some big developments to come out of it in the coming months. That's why I'm so excited to have Dave LaValle here with me. He's the global head of ETFs for Grayscale, and we're going to be talking about the lawsuit as well as many, many other topics related to Bitcoin ETFs. Dave, thanks so much for joining me.
Great to be here, Sumit. Thanks for having me.
Dave, a lot of people might not be aware that Grayscale is involved in a lawsuit with the SEC. So why don't we start there? How did we get to this point where Grayscale felt the need to sue the SEC?
Yeah. So Sumit, I think to really kind of encapsulate how we got to this point, we actually need to go a little bit back in time. And when GBTC was initially coming to life in 2013, most people don't realize that at that point in time, it had always been envisioned to be an exchange traded product. And that's exactly why the structure in 2013 that they chose to utilize was a 33 Act Delaware Grantor Trust, which, we were getting pretty technical pretty quickly here, but that's exactly the same structure that many of the most successful commodity exchange traded products that are currently in the marketplace, have utilized. So, GLD and SLV and IIU and some of the most, well-recognized commodity-based exchange traded products utilize this 33 Act Delaware Grantor Trust structure. And so, our products have a 4-phase life cycle. And the fourth phase is to become an ETF. And it starts as a 33 Delaware Grantor Trust private placement, and then the products season for a year, and then they become eligible for trading on the OTC markets, and then they become SEC reporting companies, and that final step is to turn the product into into an exchange traded product, to uplist it to in our case the New York Stock Exchange. And allow investors to kind of experience that exchange traded product, investment wrapper and an investment experience. And so, the story started in 2013. In 2017 was the first attempt that we made as an organization to convert GBTC into an exchange traded product. Many other issuers had a similar desire to create an exchange traded product. We withdrew our filing because the SEC wasn't ready at that point in time. And then, some things changed. And in late, 2021, Chair Gensler, came out and spoke at an investment forum and said that, he was eager to allow his staff to review, applications for futures-based Bitcoin exchange traded products under the 40 Act. And, that was a really, really important milestone. And so, several issuers, put applications in to create Bitcoin futures-based exchange traded products. And, fortunately for the marketplace, those products were actually approved in late 2021. And on the day that the first futures-based ETF, Bitcoin futures-based ETF was approved, was the day that we filed for our, GBTC conversion. And that kicked off a regulatory process that lasted about 240 days. And in late June of 2022, after we had kind of exhausted the kind of, regulatory process for an approval, the SEC determined that they were going to deny our filing. And, look, we really disagreed with that denial. There was a Bitcoin futures-based ETP in market under the 40 Act. There was a Bitcoin futures-based exchange-traded product under the 33 Act. And then our Bitcoin spot conversion was denied. And, we wanted to challenge that denial. And, the way that you challenge a denial by a regulatory agency is, you turn to the courts. And so we did that. And on the night, actually, that we, received that denial order was when we, put a petition in to challenge that ruling, which essentially is the first, component of a process to take that decision to the courts. And so that's really, I know it's kind of a long-winded, answer, but it's important to understand that, like, in the very, very earliest kind of embryonic days of GBTC coming to life in 2013, there was a desire to convert this product into an ETF eventually. And we're committed to it, and we remain committed to it. And, we're really excited about, the court decision to ultimately come out.
No, I really appreciate you running through all that history. It's been a long road to get to where we are today, almost 10 years since the first Bitcoin ETF filing.
Yeah.
So obviously we can get into the details of the lawsuit, but I've been covering, this road to get to the first spot Bitcoin ETF for a while. And
Right.
the SEC continuously keeps harping on this idea of a surveillance sharing agreement or lack of surveillance sharing agreement. I'm just going to quote, what they said in that initial rejection. They said, NYSE ARCA has not established that it has a comprehensive surveillance sharing agreement with the regulated market of significant size related to spot Bitcoin. What does that even mean? To the average listener, that's kind of just legal stuff, but can you explain that?
Yeah. First, I'll say that, we respect the role that the SEC plays in this, and they don't have an easy job. But again, as we think about what has currently been approved, which is, a Bitcoin futures-based product, and we're contemplating, a spot-based Bitcoin ETF, all of these concerns around market of significant size and surveillance sharing agreements, they really apply to the underlying Bitcoin market. And, the futures market is inextricably tied to that underlying, Bitcoin market. And so, despite the fact that that language was put in the denial order, and quite frankly, the denial orders of all the other applications that have been put forth in front of the SEC, it's a little bit perplexing because, that significant market size test is not something that has really been applied to any other applications that have come to market in other instances of commodity products that have been applied for and ultimately approved. And so when you ask the question, what does it actually mean? It's a hard question to answer because it's something that really hasn't been defined. And without that definition, that's actually part of the language of the challenge that we're putting forth. But we have a Bitcoin futures product in market. That's a good step in the right direction. And we're not anti, Bitcoin futures products by any stretch of the imagination. We are encouraging of that. But with the futures market being inextricably tied to, the Bitcoin spot market, it's a struggle for us to kind of comprehend where the differentiation is there. So we believe that these are very like products. Furthermore, Sumit, the index that underpins the settlement of the Bitcoin futures is an index that is over 90% similar to the index that GBT settled to. So, not only are these two different products, but those products, when you take a look at the composition of the kind of benchmark index that's associated with them, are, virtually identical. So it's a good question. I don't have a precise answer for you because it's really never been defined.
Fair enough. Fair enough. And you kind of touched on it, Dave, is essentially the crux of your argument that the SEC isn't treating the spot Bitcoin ETF consistently, because they have approved a futures-based ETF.
Correct.
So your argument is essentially, they're not being consistent.
Correct. Again, it's a difficult job. But as we think about, what the SEC's, if we summed it all up, it's investor protection. They are and have been historically a disclosure-based regulator, not a merit-based regulator. And Grayscale and the SEC are really actually aligned in a lot of ways as it pertains to what our kind of goals are. And, the real kind of cornerstones of our business are really around disclosure and transparency. And, it's sometimes surprising to realize that that third phase of the 4-phase life cycle that I was explaining earlier, we voluntarily become SEC reporting companies, right? So our products are filing 10Qs and 10Ks and 8Ks, and that's all about disclosure, and that's all about transparency. And that's something that we've chosen to do on a voluntary basis as, one of the key kind of phases of our product life cycle. And so when we take a look at, what the responsibility or what we believe the responsibility of the SEC is, which is to, have fair disclosure, that's something that we're really championing, and we're championing that on a voluntary and a proactive basis. And I think that's to the benefit of all the investors in our products. But as you mentioned, there's a Bitcoin futures product in market. There's not a Bitcoin spot product in market. We believe that the spot markets are inextricably tied to the futures markets. And if, the SEC is comfortable with a derivative product underpinning an ETF, they should be comfortable with, the spot market underpinning that exchange traded product as well.
Makes a lot of sense. And, I just took a look at, assets under management for GBTC. It fluctuates, but I think it's currently around 15 billion or so.
Yes.
But the trust is trading at a 50% discount to its net asset value. So investors aren't realizing the full value that's locked within that trust. An
That's
ETF
correct.
conversion would obviously unlock a tremendous amount of value for those investors. Has the SEC taken that into consideration?
So in the filing process of our attempt to convert the ETF, there's actually a public comment period that opens up. So that 240-day window that I was kind of talking about, where the SEC had the opportunity to kind of review our application to convert GBTC, was running concurrently with a public comment period. And we got over 11,000 public comments, and they were overwhelmingly in support of the conversion of GBTC into an ETF. And many of the comments discussed the reality of kind of, we'll call it kind of trapped or locked value. And so by rule and by statute, the SEC has to review those comments. So they definitely have taken that into consideration. But again, I would just pause for 1 second and talk about GBTC and its current structure. And yes, you mentioning that it was trading at a discount to its net asset value is absolutely the case, but the product is behaving as designed. And, that's exactly why we're trying to convert this into an ETF, is because we want to ensure that it's trading in the most efficient manner as possible. And look, you've been covering ETFs for a long time. I've been in the ETF market for a long time. ETFs have proven to do a really good job of tracking the underlying assets, despite the fact that it might be turbulent markets, despite the fact that the underlying markets may be, challenged either in liquidity concerns or challenged because of, other complex aspects of what's happening in the broader markets, or, with a particular asset class. ETFs have really been kind of a bellwether for investors of all shapes and sizes, to ensure that they're having a fair experience of, both buying and selling a particular exposure or a particular risk with a high degree of confidence. And that confidence is really underpinning that they're going to buy and sell that ETF and know that they're getting an exposure, at a fair price. And so despite the fact that GBTC is currently trading as designed, that conversion into an ETF is, going to not only kind of unlock some of that, trapped value or kind of get that discount to collapse to its NAV, it's going to allow investors to experience, the ETF wrapper in a new asset class that will give them the ability to invest with a high degree of confidence. And that's really what we're after.
And is it true that if that ETF conversion happens, essentially overnight, that discount would collapse to nothing?
So, what that ETF conversion will allow for technically is the opportunity to, create and redeem simultaneously. And that simultaneous creation redemption process is really the kind of, backbone of what makes kind of the ETF work and the ETF magic. And so, as many trading firms in the form of market making firms and also in the form of authorized participants will be able to realize an arbitrage opportunity. And that arbitrage opportunity is, precisely what makes all of the ETFs trade very, very closely to their intrinsic value or their kind of intraday net asset value, and allow investors to, buy and sell the product with a high degree of confidence throughout the course of the trading day. And so, we expect the exact same process would transpire with a GBTC conversion into an ETF. And that result would be, a very tight bid-ask spread in the secondary market, trading on exchange. Many participants, both, digital asset firms that are, native in trading digital assets, and then also, ETF shops that are, high quality arbitrageurs in the ETF marketplace, would all come together, really creating a dynamic liquidity pool that would have very tight spreads, quality size at the inside market, ability to execute with a high degree of confidence, and then also, relying on the creation redemption function to ensure that the product really didn't drift away from its intrinsic value. So I know you said overnight, upon ETF conversion, we believe that it would trade very efficiently. And we're really excited about that. And we think investors deserve that.
It sure seems like that ETF conversion is the most straightforward way to get GBTC trading close to NAV. But are there any other ways to collapse that GBTC discount?
Yeah, so, the ETF conversion is the way to most efficiently collapse that discount. There's been plenty of suggestions in the marketplace that there are other ways to achieve Reg M relief. That Reg M relief really is the ETF conversion. The ETF conversion is what will get Reg M relief for GBTC. So, I've often said there's a lot of Reg M experts that have been in the marketplace. But the truth of the matter is that, that ETF conversion is what will achieve Reg M relief for GBTC. And that is the path to ensure that the ETF behaves as we want it to behave, both trading the secondary market on an intraday basis, very tight to its intrinsic value, and then also, kind of on a daily basis, ensuring that the product is tracking its NAV.
Gotcha. And then Dave, you talked about that first Bitcoin futures ETF earlier.
Right.
I want to now talk about, what are the pros and cons of a Bitcoin futures ETF versus the spot Bitcoin ETF that you want?
Yeah. So first, just to be abundantly clear, I quickly mentioned it earlier. We're not anti-Bitcoin futures ETF. We think it was a really, really momentous, win for the marketplace and a great step in the right direction. But as we, kind of assess the market as a whole, and we talk about commodity-based exchange-traded products, it's really important to note that in instances where a commodity can be reliably stored, so, in a vault, let's say, so for example, precious metals like gold or silver or platinum or palladium, the marketplace has spoken very loudly, right? And that loud voice is in the form of AUM, that the marketplace, overwhelmingly prefers a spot-based ETP. And in instances where you can't reliably store, a commodity, so let's say oil or, different aspects of kind of agriculture, wheat, cattle, hogs, the marketplace has really settled for a futures-based exchange traded product exposure. And so we see that in, AUM levels as we're kind of taking a look at the broader kind of commodity-based exchange traded product landscape. And so there are a number of different kind of structural differences that we can talk about, but I think it's, really important to identify, what the market's preference is. And in that light, we believe that a Bitcoin exchange traded product is going to have the same exact preference as, the marketplace has spoken about, other precious metal or other commodities that can be reliably stored. When we actually talk about the nuance and the difference between the two, it's an oversimplification, but the Bitcoin futures product holds futures. The Bitcoin spot product holds the spot underlying, in this case, Bitcoin. And so futures are, a security that need to, expire. That's the way futures work. They have expiry. And so there is some complexity associated with managing the underlying kind of assets or the underlying securities, or in this case, the underlying futures in that exchange traded product. And so the portfolio managers, as a function of needing to manage that product, need to ensure that they are, rebalancing the portfolio. They're selling the futures or liquidating the futures that are, going to expire, and then purchasing futures that have, longer dated expiry. And that process that happens inside of the fund of buying and selling those futures adds some operational complexity. It adds some cost. And as a result of that, ultimately ends up, being, a little bit of a drag on the ability for that product to really precisely track, the performance of the underlying asset. And so again, if it's oil and you can't reliably store oil or hogs or wheat, a futures-based exchange traded product is a great way to gain exposure to a commodity. But if it's gold or silver or Bitcoin, where you can reliably store it, you would much prefer having an exchange traded product that does a really precise job of tracking the underlying asset. And so I think that's the best way to talk about the differences between the two products.
And it is interesting, Dave, if you look at the inflows into the first Bitcoin futures ETF, they haven't been that huge, right? Everyone thought the first Bitcoin ETF would be this mega hit. Do you think it's because people are waiting for that spot Bitcoin ETF?
Well, Sumit, I'll have to disagree with you slightly. The product gained $1 billion in exposure. I think it was in 1 or 2 days. So it was a screaming success early on. Now, I would agree with you that since then, there hasn't been overwhelming inflows, but I can tell you anyone in the ETF industry, if you said you could launch a product and get $1 billion in a couple of days, I think they'd sign up for that. So it was a really exciting success in the beginning. And I think it was a product that was quickest to $1 billion, eclipsing the success of GLD. But you're right. Since then, it hasn't really garnered the kind of demand that we would have probably, hoped or expected. I think that the marketplace is generally, quite well educated on how futures-based products, work. And I think that a spot Bitcoin ETF will certainly have a greater deal of success, given all those kind of, structural and functional advantages that I walked through before.
That makes a lot of sense, Dave. Yeah, $1 billion in 2 days is quite a feat. So Dave, I want to kind of go back to the lawsuit now.
Sure.
Where does that lawsuit stand today, and when can we expect a verdict?
Yeah, sure. So let's go back in time first. So we began the process on June 29th of 2022. That's when we put our first petition in. Earlier this month, we heard the oral arguments in front of the DC Circuit Court of Appeals. And so kind of in between those two, really important dates, we saw a lot of work. So written arguments by both the SEC and by our internal and external, legal teams. And that really culminated in, the oral arguments. The oral arguments were heard in front of a 3-judge panel at the DC Circuit Court of Appeals. And we expect that, at the latest, that we'll have kind of a judgment or a decision by the courts in the fall. But quite frankly, it's very hard to handicap the timing on such things, but the process has been moving pretty swiftly. And, the date for the oral arguments being in early March is probably a little bit quicker than we would have anticipated when we were kind of contemplating this back in June. And so there is a chance that we actually get a decision from the courts before they go on their summer recess. And, that could be in the next several months. But I think it's either, right before summer recess or just after summer recess, we'll have a decision. But look, I think it warrants a moment to talk about the lawsuit. And this really is not a lawsuit about Bitcoin. It just isn't. I think a lot of people, tend to think that it's about Bitcoin and the merits of Bitcoin, and certainly with what has transpired in the marketplace over the past couple of months, there's been a lot of talk around digital assets. But this is really a simple case about the law. And, we feel that we are being treated unfairly, and that, a like piece of business is being treated differently, than has been treated by the SEC in terms of the Bitcoin futures product being approved and our Bitcoin spot product being denied. And, the Administrative Procedures Act is the act that essentially oversees, regulatory agencies and, their ability to ensure fairness, from a competitive perspective within industry. And so the case that we have before the DC Circuit Court of Appeal is an Administrative Procedures Act case. And so the merits of the case are about fairness and are about whether or not the denial that the SEC gave us, was fair relative to the reality that they have also approved a Bitcoin futures-based product. So this is really a very kind of simple, common sense, straightforward legal argument. And what's in front of the courts is really a question around, the merit or the ability for the SEC to have denied on the grounds that they denied, in the light that they also approved a Bitcoin futures product. So we're like really excited about the decision to come out. We feel very confident about the case that we have in front of the DC Circuit Court of Appeal. We also have a high degree of confidence in the courts. And, we decided that we disagreed with our regulator, and no one would take suing their main regulator, lightly. It's a really important decision. But the strength of the case and the confidence that we had is what led us to make that decision.
No, absolutely. Absolutely. And I'm glad you talked about the significance of this lawsuit, because I was going to ask you, what's the significance of this? Is it just a Bitcoin thing? But you're saying it's a matter of fairness, and it matters a lot for the ETF industry in general, right?
It's huge for the ETF industry. And listen, this is also about American competitiveness, Sumit. I think, in a bit of an echo chamber within the US market, we talk about whether or not there's a Bitcoin ETF, a Bitcoin spot ETF or not. But if you look around the globe, in Canada, in different jurisdictions within Europe, and certainly, in Asia, Pacific as well, you see that Bitcoin spot products are coming to market, and it's not happening in the US. And so there's absolutely an American competitiveness component to this. That's not something that's going to be, debated in the courts, not at all. But, there is a factor that, it's not like, individuals aren't able to get exposure to Bitcoin. There's a number of different ways to get exposure to Bitcoin. We're actually, trying to pull this product further into the regulatory perimeter. And so, a lot of what we're hearing and the rhetoric that we're hearing coming out of DC, and look, quite frankly, there has been some fraud in the marketplace, and that is not good for anybody. And people lost money, and we're sensitive to that. But again, that has nothing to do with the merits of this case. And quite frankly, it's the polar opposite. So coming out of, what's happened recently in the industry, there has been a call for higher levels of transparency. There's been a call for higher levels of regulation. And our product is actually, really quite squarely in the middle of the regulatory perimeter. And we're trying to pull our product further into the regulatory perimeter. And so that transparency and that kind of regulatory oversight and that structure is something that we're really championing. And we think, will resonate with investors. And, so there's an American competitiveness component to this. There's kind of pulling this further into the regulatory perimeter component of this. There is kind of, an advancement of the ETF market that we're talking about here. And then, of course, the underpinning of the actual legal argument, which is the Administrative Procedures Act, which is really about fairness in the marketplace and ensuring that people can fairly compete.
Yeah, it is interesting because there are spot Bitcoin ETFs all around the world, right?
There are.
In Europe and where else?
Canada, there's several exchange traded products in Canada, spot-based products in Canada that have had success. And I should also mention that they're functioning and behaving really well. And the firms that act as authorized participants and act as market makers, these are global firms. And so, these products are, kind of being battle tested in other jurisdictions and behaving as designed and tracking the underlying NAV. And we've had plenty of volatility in the marketplace, but we're seeing the products, closely track NAV on a daily basis, and on an intraday basis, we're seeing high quality liquidity. And so, we have a high degree of confidence that would be the same in the U.S. market. And by the way, we have APs signed up and ready to go, and we're operationally ready. So, we're certainly, anticipating, it's just a matter of when we get this approval from the SEC, not if.
Gotcha. And if you do get that green light to convert GBTC into an ETF, do you anticipate that you would do something similar for the Ethereum trust that you have?
Yep. So as I mentioned, kind of at the top of our segment here, that phase life cycle for all of our products is something that we really champion. And so we absolutely are committed to that 4-phase life cycle for all of our products, and certainly have aspirations for all of them to convert into exchange traded products eventually.
And Dave, before I let you go, do you have anything else you want to add?
Sumi, the one thing that I would say that I get really excited about and that has energized me for my entire career, certainly within the exchange traded product and exchange traded fund landscape, is, what we're going through right now, this kind of innovation and evolution, it is really no different than what has been happening with every asset class that has been pulled into an ETF wrapper. So we just have eclipsed the 30-year anniversary of SPY. It's super exciting. But SPY came to market in 1993, right? And I don't think most people really remember or recall that the call for this type of product really was a result of the crash in 1987. And so the American Stock Exchange and some of the kind of, I call them like first generation kind of ETF, innovators were working for years and years and years with, indexing geniuses and with the SEC and with the American Stock Exchange and with asset managers and with fund accountants, and with custodians to try and figure out how we could innovate and bring this unique exposure to market. I think, people who, are familiar with ETFs now would think about S&P 500 market cap weighted exposure as a pretty boring ETF, a really functional ETF, but a pretty boring, ETF exposure. But that was a massive innovation that was years and years of debate and years of regulatory engagement until it kind of came to market in the right way. And after, equity exposure came emerging market exposure, and came, fixed income exposure and subsectors of fixed income. And then it was, commodity exposure and, GLD in a physical product. And, so these innovations have continued to happen. And for much of my career, the regulatory engagement was twofold. And the twofold was, okay, how is this underlying asset or underlying exposure going to behave? And let's talk about the liquidity characteristics of the underlying exposure and how the underlying exposure behaves. And then also, hey, how is the ETF going to behave? And is the ETF going to function properly with this particular exposure wrapped in it? And I think we've come so far in the ETF market that now the real debate is around, the Bitcoin exposure, and the ETF is a point of credibility. And I think it's really exciting for the ETF market to have come that far. And I think it's, a poignant thing to talk about, as we have just, kind of celebrated the 30-year anniversary of SPY. There's a lot of really intelligent, hardworking, smart people in the industry, both on the product side and on the regulatory side, and the legal side, on the compliance side, on the admin side, certainly asset managers, trading firms, exchanges that all come together and have done something that's been a really massive benefit to investors. And when I say it's a massive benefit to investors, it's taking some sort of asset or exposure or investment opportunity that was really only available to a subset of the marketplace. So in 1993, having S&P 500 exposure, market cap weighted exposure, was an institutional quality mandate. And when it became available in an ETF wrapper, it was available to everybody, the smallest Jane Q public retail investor and the largest institutions in the world. And oh, by the way, everybody had the same experience. They have to buy it and sell it the same way. They have the same management fee, and it operates the same way. And so as the evolution of the ETF market has happened, it has continually afforded the opportunity for all investors to have an exposure in a really equitable fashion, and an exposure that was historically only available to a smaller subset of the marketplace. This Bitcoin ETF story and this Bitcoin ETF innovation is exactly the same story of an ETF bringing an exposure that is available to a subset of the market right now, call it Bitcoin enthusiasts or, really sophisticated institutional investors, and then putting it in a wrapper that's going to allow it to be available to everybody. And that's what's really exciting about this. And that's why I, get up and get charged up every day to try and, continue to fight this battle and win for our investors. And, I really appreciate the opportunity to have the chance to chat with you about it and share it with your viewers.
No, I love that comparison with SPY. And I think this is a great place to end this very enlightening discussion. Dave, thanks so much for taking the time.
Thank you so much for your time. We really appreciate the opportunity and look forward to doing it again.
Likewise.